The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Hi, everyone. Larry is traveling, so this is Basil Chapman. I do the Tiger Technicians Hour at noon, and my pleasure to be sitting in here for Larry. Larry's traveling, as I say. Let's just go to the technicals here. We're looking at the Dow on the left. This is not the futures. I just want to show the cash position right now. Look, the Dow on the left is the daily chart. In the middle is the weekly. On the right is the monthly chart. And you can see that the MACD, Larry never uses these, so this is a different technique, a different system. Everybody has his systems. Whatever you get used to, that's what I say stay with. That's the way it should be. But I use moving averages in different ways. You can see that if you're looking at the daily, you'll see that black line there. That's the 14-period moving average. There is within that a green line that changes color when it crosses below the 14, and that's the 9-period moving average. It's green when it gives you a good signal, and when it's a negative signal. And that is because this is a moving average. It is very often quite late. So this is not the technical aspect that you really want to use for timing. There are other techniques that you want to use. But look, this is green, and that says that the Dow has gone to a leg B. And just real quickly, let me explain what that is in the Chapman wave methodology. There are a couple of things I look at. First of all, there's an H pattern, there's an arch pattern, and then there's a U or cup formation. In my work, there are only 3 patterns. There's a straight line up or down. There is the arch. It could be a V shape, but it's still an arch formation, or a cup formation, and that could be a V. So you've got an inverted V or an arch. That's 1. You've got a cup or a V-shaped pattern. That's 2, or a straight line. But within that context, you can also get, let me show you right here. If I can move this across, if I can even find it, it should be right there. It's being covered. There it is. You get, my technique says that you identify the lowest low bar on a decline, and then you merely count each successively higher peak, and you alphabetize them, uppercase on the way up, lowercase on the way down. It's when you get to the 4th highest peak, A, B, C, D, the 4th highest peak. Remember, this has got nothing to do with A to B equals C to D. That's a different lightning rod formation completely. That would be this pattern here, where that length could equal that length. Completely separate technique. This is just merely the simplest thing by 1 penny. If it goes above the previous peak, it gets labeled alphabetically in sequence. When you get to D, other things can happen. It can even go to G. I'll show you where the G is. Look, made a G right there at 26,241 in the daily chart on the 25th of February. Then it pulls back and it comes down to a trough C at 25,252. The MACD starts to flatten out, but it's still very weak. Even now, it has not crossed positive, and yet the stochastic turned around nicely and gave a good signal to say that there should be a move up. It too is actually lagging quite a lot. It's at 53%. I like to see it over 80%, but the unbalanced volume made a nice W formation, and even though the Dow stalled right at that 14-period moving average, yesterday, 2 days ago was a strong day. Yesterday was a follow-through, but didn't take out the high. So this becomes what I call gray peak A and gray peak B. Why is it gray? I haven't got any buy signal to buy mode confirmation saying that this is a brand new buy mode. This is a pattern that could fail at any point because it's underneath the previous major high. All right. And in the weekly chart, look at the spectacular single leg A up from 21,700 to 26,241, 20% gain in leg A. Now we've got a peak A, and now we have to wait for 26,242, one point above. It's actually 1 penny above, and that starts to make a new leg B. And then I also give these projections that could work out. The MACD and stochastic are still very strong. So now we can go back to the futures, back to the future. And look at this. The YM is up 118, gone a little stronger ever since I gave the update, 9 o'clock update. And it's above this trend line. I love to look at the cup formation, and cup formations can form double tops. And that could happen if the MACD starts to deflect lower, doesn't cross the red line, the green faster moving average doesn't cross the red line, you could get it turned down and then a consolidation. And this weekly chart says, you know, that doji candle, that's right at a particular turning point. That's really important to monitor. A close above that would be very positive, especially if it's 2 weeks in a row. If it's just one pop and it comes back down, you've got to be careful. It could start to pull back. My suspicion is the way the market's moving right now, that we will have some kind of consolidation in that area between 25,200 and whatever high we make over the next 3-4 sessions. All right. Now what we're looking at is, so that's a positive. If I look at gold, I just want to do this. I had a couple of questions coming about gold. Gold is now up 8.8. If gold takes out, even by 1 point, this is by 10 cents, I should say 1311.6. The high today is so far 1310.8. It looks like it's going to try to do that. That'll start a leg C. Now, the MACD has finally crossed positive, still early in the day, but it is crossing positive. The stochastic's running is not really good, and the unbalanced volume is not really good. Relative strength is good. So this is suggesting that gold should have very strong support based on these particular patterns in the 1303 to 1295 area on any pullback. And you can see the weekly chart hitting the orange 200 period exponential moving average. I wanted to show you something else that I think is quite interesting. Look at wheat, dust wheat. Wheat has made a leg B. It could become a peak B if there's a move over 454 and a half, sorry, that is 464 in the daily chart, and this is the continuous contract. This is not the wheat contract, it is the continuous contract. That would be positive. If it does it today, that extends leg B. If it does it tomorrow, it'll start leg C. Look how nicely the MACD has crossed positively here in wheat. Stochastic's very nice. It's running very strongly at 56%. Weekly chart is just terrible. It's going to need a lot to improve that, but it always starts in a shorter time frame, and that would be the daily. Look at soy. This is the soybean continuous contract. Had a really strong leg A. This is only an A up. It'll make a peak A if there's no new high today above. There's a continuous contract, 911 and a half. It's trading at 906 3/4. So it's got a bit of a way to go. The MACD did cross positive, stochastic crossed positive. And this weekly chart is way better than we were looking at in wheat. Monthly chart is not too great. It's got that H pattern that says watch out for a failure. But now look at this. You've got corn. Corn continuous is trading in a leg A, and very much like soy, holding support, acting quite well. So I'm looking at this and I'm thinking, hey, grains could do a bit of a move up here. Questions are coming in. I'll take them straight after this break. Basil Chapman sitting in for Larry Pesavento. The time is 9:15 a.m. Eastern Time, and the future's up sharply. Dow futures up 114. S&P is up 11.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi folks, we're back. Nothing like a little Mozart overture there to get us back in. I was asked the question about the QQQ cash. That is the Invesco QQQ Trust Series, trading at 179.29, up 81 cents right now, pre-market, pre-open, which will be in 12 minutes' time. I've got it at a peak D. You see the MACD, this is the 120-minute chart right here. See that the MACD's dipped down. It's just slightly negative. Stochastic has gone from really strong in the 90% area to 70%. So that says it is under support, but price is the arbiter of a trend. And you can see this green line right here is, in fact, the 9-period moving average, and the black line is the 14-period moving average. And that says that any pullback today underneath 177.59, well, first of all, let's start with the green line. The 177.99 would start to look a little negative, but a close, this is a 120-minute chart. That's the right corner right here. A close below 177.50 at any point in the next 2 days would suggest that at least some kind of a hiatus is happening in the rally, a little bit of a timeout. I say a little bit because you see this chart on the left is this is the daily chart of the QQQ. And you can see from that peak all the way to here, I've drawn in 2 lines. One is a red one, pink one, and the other is a green. I made this green a little thicker yesterday when I was on my show in the Tiger Technicians Hour, just so people could see it. And I said, this is called the Chapman Wave Inside Track Repellent Zone. Every time, sometimes you get it as a channel, a wide channel. Sometimes it is a little narrow. And I like to take the upper line of resistance or the lower line of support and say, there's a chance that every time it gets to the outer limit, it gets repelled. And look, it's got repelled once, twice, 3 times, 4 times, 5 times. This is a cluster pattern with 2 bars hitting the outside line. So far, it looks like 179.23 is going to snap you right to the top part of the green line. And if it starts to trade there for about 2 hours or 3 hours, you're now outside. And that makes this support. In other words, all of a sudden, the 179.90s becomes support. It's just an easy technique. Take a trend line, do it to to get used to in the beginning, just go to the outer line, the wick highs, and join it later on. You'll learn how to use inside candle, the bar of the candle, but this is a really good way to do it. So that's the one thing. If I look at the NQ, this is the continuous contract, you'll see that there's a different trend line. It's already taken it out. And that's the reason why I like to do different time frames. And I also like to do the different contracts, because some contracts will give you of the same root position, can give you, look at this. We're nicely outside of that. I don't even have to put in the other trend line to call it an inside track, because you've on the outside trend line, we're already above it. For 1, 2, this is the third session. That makes this line really important as support, and I'll give it to you right now. So we're at 7388.50, up 27 in the NQ futures. That's the Nasdaq futures, and right now that particular line I'm looking at as support will be 73.48. So at any point during today or tomorrow, you see it start to trade in the 73.30s. Means a little bit of a pullback is underway. Okay. Couple of things that I want to look at here, because I think because it's Larry's show, I'd like to kind of follow what he usually looks at. Look at the dollar. The dollar is down 13 right here, 0.13. It's at 96.36. It's in leg B to the downside. The MACD crossed positive sharply for that single leg, that very sharp move to 97.71, exactly to the penny, the high of December, 97.71, in a cup formation. And the technicals are way weaker this time, and it says the dollar should continue to consolidate. I still like the dollar longer term, monthly chart, but on a short-term position, I think that there's still a consolidation going on. And if you look at, we'll do gold right, so the dollar says it better hold 95.70. This is the dollar index. Because if it breaks under that, then it's a deeper consolidation. If you look at gold now, up 8.3, look at the weekly chart. The weekly chart is walking the 14-period moving average. It's above the 9-period, the green line, bumping to the resistance at the orange line, the 14-period thick orange line, 14-period exponential moving average. Look at silver. Silver right now has a much deeper retracement, especially from that peak D high that was made at 16.293, the week of the 22nd of February of this year, pulls back to the 15 area. Now it's running, but it isn't doing the same as gold. It hasn't for a while. In fact, it's kind of lagging yet. It needs to get to the 15.61, the daily orange 200-period moving average, to really show that it's going to break above this horrible candle of the 1st of March. 15.66 is the high, 15.16 is the low. Not very good. So this is lagging. And I like to see the two in unison. I also like to see it with the GDX, which is, GDX doesn't look very good here. And it looks like it's got the pattern that I call the dreaded H. And that's the big thing that's been happening in gold. It's been frustrating a lot of people from emails that I've been getting from people saying, what's going on? Why aren't the gold stocks moving like gold itself? Well, that's because we're in a different phase of the market. We're looking at gold having strength for other reasons. I think it's international. It is a harbinger of fear. It's different. I was asked to look at platinum. I believe it's platinum. Yes, platinum is much nicer. This is a leg B. Look at this beautiful cup formation. And platinum has been showing strength. So platinum's used in emission control for automobiles, for the catalytic converters, I think. Well, whatever it is, it's showing a much nicer strong leg B, and I think that is important. It's still only, the MACD hasn't yet crossed positive, so the price is moving very nicely. I want the technicals to follow. They haven't followed yet, but the weekly is improving. So at 853.70, up 19.70, up 2.36%. This is really good action. It means that the support is probably strong between, it's 853, between 842 and 836 should have very strong support. And so that was a question. Now let me just go to the EUR USD before the break comes, and then we go to a break before the market starts. This is still a leg A in the euro. Really, the euro has been struggling. It's a very nice percentage move, but then it had a big percentage move down from back in late February through to the March low. And now it's trading at 1.135. And the weekly chart just looks terrible, although it's improving, but terrible. And the monthly chart, look at this monthly chart. Oh, my. This is the flat stochastic is not a good sign. So the euro needs a lot of work to really move into the 1.145 area. That would be saying, great. Now it's starting to show some real veracity, strength, and that'll be important. We'll look at the USD JPY right here. That's the euro-dollar currency pair making an arch formation, 111.43. It's kind of stuck in a range. I'll be back. Basil Chapman sitting in for the one and only Larry Pesavento. This is Larry's show, Trade What You See. And I'll be back straight after this break for the opening.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi folks, Basil Chapman sitting in for Larry Pesavento. Yep, this is Trade What You Say. I just wanted to show you something. This is introducing the Chapman Wave methodology, my CD book, chart analysis in the stock market. There's a chapter that I have out of the 27 or something chapters. It is the double top formation. I want to show it to you now. I think it could be timely, so I want to just show you this. And this says when the price is moving up in a cup formation and it tests the top, and then it starts to pull back. You've got to watch closely, because if it goes a half from the left side lip to the bottom, the trough at the bottom, there's a good chance that it's going to test the bottom. If it closes below the bottom, it can go even lower and go to one to the downside. So let's just see. We've got a 10-minute chart right here of the E-mini, and it did that. Look, here's the cup formation, and it rallied. It couldn't make a new high, and it pulled back. And what did it do? It tested the low. So this is going to be at 28.50. Let's watch this closely, because the MACD is weak and the stochastic is not very strong. It'll have to push into the 28.54.50 to 28.55.50 area quite soon to say, okay, you could treat that as a base if it can hold there strongly. Otherwise, it makes a cup formation, could make a second cup formation, and then it would pull back. This is going to be very interesting, because for subscribers to my opening call, that's my daily newsletter, what I'd said is in the 120-minute chart right here, we wanted to see a leg D. There was the cup formation. Now this leg D has gone really much higher than the left side high. So that says that's a positive breakout. Day is young, just like the first couple of minutes. But we'll watch this closely, because at any point the Dow's now up 122, cash is up 122. There's the leg C, and this is also Chapman Wave 5 to the upside in the 120-minute chart, the daily chart right here on the left. This is on the right is the 120-minute chart. So this is a very important moment. How long can this rally last? Does it hold very steady? Does it any pullback find buyers? What is Boeing doing? Boeing is a big part of this, whether you like it or not. It's up $1. It's up $1. It's holding okay. So it's not a big negative like there was a week ago Monday, when Boeing had the terrible news and then plunged, and yet the market came back very strong. That was showing internal strength in the market. So Boeing right now is a bit of a key, but I also want to talk about some other things. The XLF, Larry likes to look at the financials. Look, the XLF is having a great day. It's up 16 cents today at 27.07. I shouldn't say great day. It's had a great couple of days, but especially from the low that was made in the 25.60s, it's gone to 27.08 with only green candles. Look at this, green candle, 1, 2, 3, 4, 5, 6, 7, 8. And that, I believe, is from last Monday, from the 8th. Yep, last Monday, the 8th, makes a low of 25.68. Nice work. I like that. Look, there was the arch formation. Instead, it turned into a V-shaped pattern. Now, for a moment, I'm just going to talk about patterns in terms of what I like to look at. A V-shaped pattern, because of the speed down and the speed up, has greater momentum and velocity. This is just my own theory, that if it takes out the left side high on the way up, or if it's on the way down, takes out the left side low and pierces it quite decisively, and then holds that bar, if it's on the upside towards the high of the day, or the high of the bar, doesn't have to be the day, could be a 2-minute chart, or if it's coming down and holds the low, and that says, unlike a cup formation, which can start to stall and make those cup and handles, one of my least favorite patterns, V-shaped patterns can actually continue in that direction if that inflection point is pierced. It's not a deflection point, but an inflection point. So we'll watch this closely. We've already made leg B in the weekly chart, because we went above that high that was made, and the 26.90s, I believe. We're at 27.05. Now let's harken back to that. Yep, there's that 10-minute chart. That 10-minute chart has that pattern. It says the technicals are weak. It's going to have to push really hard for the E-mini to break and push into the 28.56 area without testing the low that was made right here, 28.48.75. So 28.49.50 right now. These are just techniques. He makes, as Larry always looks at the patterns, we look at templates, we look at the fractals. Those fractals, when Larry's looking at his Gartleys that become butterflies, these patterns, it doesn't matter what the time frame is, they repeat over and over, because these are parts of human nature that we're looking at. This is a price point it's a price point in fractions of the total accumulation of everybody's thoughts, ideas, and price points right here. Okay, we're going to get back to our story. We were looking at the XLF holding quite nicely. Let's look at Goldman Sachs. Goldman Sachs is up 257, another 2-point gainer. Good. Yesterday was a big move. This is, for me, really important. I want to see the XLF moving strongly higher. So there were questions I had about the MJ, which is MJ is the alternate harvest cannabis sector. Nice move up today. Look at this, 39.25, very strong. Just for disclosure, we are long for my subscribers to my opening call. We've been long since the 29s. It's at 39 right now. I like this. Look, and this is the techniques repeat over and over. Look at this technique. See the trend line I took from the outer bars, the wicks, the high. 45.40 was the high back in September, the week of the 21st. Then the following 4 weeks, it just kind of consolidated. Then it had a pop up. It went to 44.29. If you join just simple techniques that you can do at home, you don't have to, there's nothing special here. You join those 2 bar highs, and what happens? The high was right here at 38.21. If that's taken, I said to subscribers this morning, if it's taken out, that's going to be very positive. And one of the reasons is because it's breaking the weekly resistance from the Chapman wave inside track repellent zone. Look, that pink line. Look how it held. It stopped the price right then. It stopped the price for 3 days. 4th day, boom. Sorry, 4th week. Boom, it breaks out. MACD strong. Stochastics at 89%. Very strong. This is acting very well, and it makes this entire area right here at 37 major support. At least this is the daily chart, so it's on the shorter term. Weekly has it at 35.5 to 34.5. Okay, so that's MJ. Next question I had was, where was it? Yeah, question I had, it was earlier on. Oh, a question I had was the EEM. This is the iShares Emerging Market Index, and it's trying to test, here we are. This is the same thing, cup formation. Just make it easy. I'm drawing a second cup formation. Here we go, 1, 2. I'm just doing it like that for now. Then what I like to do is to have left side, right side, price, time match. These are techniques I teach in my classes. So that goes there. You use the plumb line right in the bottom, and you join that up, and look what we get. We get a price point that is a focal point for us. I also like to write there, and it says by tomorrow, by Wednesday the 22nd. No, that's a little bit, that's a couple of days. By the 21st, the test of 43.73 should occur. And I'll show you why we can talk about it as a resistance point as well. Right there. I'll be back. Basil Chapman sitting for Larry Pesavento. Dow's up 132. S&P's up 12.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Hi, folks, we're back. Basil Chapman sitting for Larry Pesavento, and we want to look back. Look, there it is. There's that cup formation, the drop bucket. I call it the drop bucket formation because it looks like a backhoe. There's the arm of the backhoe, lifts up all the dirt in the bucket, then just drops it, kaplop. So now it's gone underneath that left side low. So as Larry likes to show you in real time what's going on, I just showed you in real time a particular technique that shows you a failure pattern with the cup formation, taking out the halfway point, halfway marker, testing the low, and now taking out the low. The question is, will you get the left side, right side? Of course, I can't trade right now. I'm doing the show, but will you get right here? Will you get the left side, right side match, price time match? Here we go. Okay, let me just do this. Okay. So this is what you really have to be careful of, that if there is a pullback, that you don't start to go like one third below the cup low, because what will happen is there's a good chance you make a 1-to-1 extension to the downside. So 28.48 right now, there should be some buying coming in. Otherwise, there's a real problem, and it should go very quickly to the 28.45 level. So we'll be watching that. This is just a test case, the E-mini 10-minute chart. Not a big deal. It's just, let me show you. Yeah, on the 2-minute chart, what we did, made that peak D. We're always looking at that D. Makes a double top, and now it's pulling back. Went under the orange 200-period exponential moving. All right, enough with that. We want to go to the bigger things, bigger fish. We're looking at APPS, which is a question that came in. What is that? That is Digital Turbine Inc. at $3.59. You didn't even see the price, $3.59. It hit 363 this morning, gapped up, very nice. This has had, now there's a technique that I talk about called the Chapman wave instant restart. Yeah, it has to happen within 3 bars from a peak D. It did that. So now you can have an alternate count, and this is G/C, still very positive. Look at the MACD, stochastics at 87%. Could pull back a little bit, but the weekly chart says real good chance. And now we have to go to the monthly chart. Whoops. APPS trading at 361, and that suggests that that high that was made way back in 2015 in May, that's a month, so in May of 2015 at 439, yeah, it looks like it's going to have to wait, but that would be my upside target, but you're going to need time. We're talking a monthly chart here, so let me just do this, talking about another maybe 2 months. Within 2 months it should do this. So now I'm going to get, the plumb line doesn't match up, so I have to use another one. This is the only time where, instead of doing it mathematically, we use a little artistic license, but very specific characteristics we have to look for. And that says, by May of this year, 4 years after that previous high of 439, let me just double check because I need to do some work here. to see whether that's going to be true. Oh, it could be longer. Well, it doesn't matter. We'll treat it as the first stop. First stop says that 377 is the 200-period moving average in the monthly resistance, but at some point by May, there should be a test of 439. 439 would be another 28, maybe 30% from here, 27%. So yeah, they're acting extremely well. The way it's acting, it could get close even sooner. All right. Now, a couple of things that I was asked about is in the characteristic of the rotation through like a smorgasbord, or like a chess set, or like a puzzle. We're looking at all these different things, and that means we have to look at the VIX index, which went into the 12s. It's at 1274 right now, and that's suggesting that I always say that underneath 13, in the 12s, 13 or 12s or lower is buying pressure for the market. Within that context, going into the mid-teens, the 15s, 16s, says, got to be careful. Could have intraday pullbacks of triple-digit in the Dow, strong double-digit in the S&P. Going to 19s or 20s means that selling pressure is intense, and if it holds for a closing basis on a weekly basis on Friday at 4 o'clock, if that VIX is above its 200-period moving average, and in this particular case, 1520, it would suggest that selling pressure will come in the following week. It has to close. Actually, I'm going to say something different. If it is in the 17s, that says selling pressure should come in the following week. So those are just levels that I look at. But back at the ranch, we've got to be considering that the pullback from 18.33 in March, that was March the 8th, where the market made its low and the VIX index made a volatility index measuring fear. Now, the expression always is fear and greed. I have a terrible time with that greed part of it. Look, if you're in a position and you want to hold it because you believe it's got a longer-term outlook, you're not being greedy, you're doing your homework, you're looking at it in a different way. The fear part of it is absolute. That was fear right there. In the 18s, boom, comes back down. Now in the 12s, it's saying, and this is the part that I like to look at, it's saying that there's a benign look at the market at this particular point. And that's really the issue, that once you get to the 13s or lower, you're looking at a very acquiescent market, a market that wants to move to the upside. And as soon as it starts to bounce and get into the teens again, you've got to say, okay, be a bit careful. So keep that in mind. Wanted to go through that. So the aspects we're looking at are the TLT. If the TLT starts to rally strongly, goes into the 122.50s. That's at 121.13 right now, so it's a 1.5. And the market actually pulls back. It's saying, whoops, be careful, because we've got Fed tomorrow. That could turn around. I got an email saying, whoops, Fed tomorrow. The Fed's been propping up the market. You know, I don't think it's the Fed. I think the Fed is part of it. The Fed was merely a confirmation, just as I'm looking at this, the crossover in the moving averages being some kind of a confirmation. Fed is just confirming that there is strength, there is buying. The United States is the economic behemoth right now. It still is, no matter what you read. Remember, you can read as much negativity as you want, but the jobless rate is phenomenal. It is at the lowest point in decades. You can say, oh, they're always fudging figures. Well, you can't fudge 60 years of figures. Oh, maybe you can, but you can divide it in half. It's still at the lower point. So that is really important. And jobs, once you have jobs, and this is the mystery here. So you have jobs, and the housing index, the HGX, is up 2.10 right now, but it's had a terrific move from the 229 low to the recent 292 high, pull back a little bit. It's trading at 288 right now, but it went from 369 back in January of 2018. New York Stock Exchange also hasn't made its all-time back to its all-time high. The HGX, Philadelphia Housing Sector Index, is from 369, it plunged to 229, 130 point, 120 point. That is huge. I mean, it's a third. and now it's up very nicely. But I want to see the housing sector. I want to see Toll Brothers moving. Toll stuck 36.19. I want to see it pushing into the 40s. I want to see young people buying houses again. It is tough. You've got debt. You've got debt is another big issue here, and you've got educational debt. That is a big deal. When you're paying lecturers $360,000 for one course, I think you're going to have a problem. How do the students pay for this?
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're back. Basil Chapman sitting for Larry Pesavento. So the Dow's up 112, S&P's up 10, and this real quickly, this chart is making the second cup formation. It was a little deeper, but it's trying very hard. This is going to change to an arch formation if there is a pullback, and it takes this low that was made in the bar 10-minute bar just a moment ago, the low of 2847.50. Okay, so we're going to run out of time. I don't want to do that. Here we are. We're looking at the IWM. IWM is up only 28 cents at 156.04. It's lagging. I like to see all the key indices moving in unison. This to me is a problem. And if you go back to that 120-minute chart that I was showing you right here, we've already, let's see, right here. We've already accomplished that leg D. The MACD is strong. Stochastics at 85, it's strong. And what I'm saying is that if the Dow is only up about 50 or 60 points after being up 120 or more at 1 o'clock, between 1 o'clock and 1:30, I think we're in for a bit of a pullback, a kind of a holding pattern until the Fed makes a statement tomorrow afternoon, but still very good action up until now. So real quickly, let me go back to the IWM. What was the question? Blue Horseshoe does not like the IWM. Thanks, Basil. I'm still brewing for a retracement. Yes, I think that the IWM is the one that if it hasn't moved up strongly, but if it only pulls back gently, it's saying, hey, I'm just not participating here, but I'm not breaking down. So at 155, you have to see a close on a weekly basis below 150, 153.10, and that will be very serious. That'll say, uh-oh, but right now it's holding okay. So before we go off, we're about to wrap up, and I'll be doing my show, the Tiger Technicians Hour, at noon today Eastern Time. So if you want to, if you're interested in what I was doing here, if you want to follow the E-mini that we were doing, look at this E-mini is still hanging in there. We'll be doing more of that later on, and we'll talk about these patterns. So we're about to wrap up. Stay tuned. You've got Tom and Tommy coming up for the Bull Bear Binary Options Hour. Stay tuned, and I will be back at noon in about, 2 hours time. Have a great day, everyone. I'm not sure if I'll be back tomorrow at this time for Larry. We'll see if I can make it. Have a good day.